All right. Hey, everyone. Mark here, Mark P Markets. Thanks for joining me for another U.S. market open price action analysis session. If you're new to my streams, I'm doing this now every day. I've been doing this privately, but I thought it'd be better to bring it out onto YouTube to see what people think. Anyway, so just to let you know how this works, I will spend the next 20 to 30 minutes evaluating the price action over the major markets. Okay, we're going to look at Bitcoin. We're going to look at Euro. We're going to look at S&P bonds. Okay, and we want to basically note any changes that are taking place throughout the week so far, and we want to be able to gain some kind of perspective and reasonable expectations for today and for the next few days. So this can be helpful to you if you are a swing trader or a day trader, and if you're whether in Bitcoin, stocks, Forex, it's all going to be helpful. Okay, so with that being said, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, hey everyone, hope you can see me all right. Let me know if you can see my screen or not. Okay, cool. Hey Elijah, so we got Bill. All right, cool. Good to see you all. Kai. All right. Yeah, so I'm doing this every day now. Okay. Hey, Stian. All right, all my regulars. By the way, just want to mention a couple of things real quick. I am sponsored by 8Cap Partners. If you are a non-US resident, you can open a Forex account with them. They're an Australia-based US broker. You can find the link in the descriptive portion of this video. If you open an account with them and you trade, if you open an account with $500 and you trade one standard lot of volume, you can get my training program for free. Okay. Again, that's open only to non-US residents. Also, check out my training program at markpmarkets.com. Okay, this is all the advertising section over here. Also, I'm doing a webinar today at 3:30 p.m. Eastern time. The link is also in the descriptive portion here. If you haven't registered for it, make sure you do. In fact, I'm going to put it here. Okay, look, there's the link right there. So, check that out if you haven't seen it. Bill, you've been to this one a few times. It's basically the webinar that I was conducting during the summer, basically getting into detail on the 6 steps that I use to do these evaluations and to take trades. All right, so with all that being said, let's get this thing going, shall we? All right, so first things first, Bitcoin. As you can see here, hopefully none of you were fooled by the nonsense that we were talking about on Monday, right? So what do we have here, right? This was basically a couple of days ago. Look, it was looking good, right? Everyone's thinking, oh, this thing's going to go to 50K again. Nonsense. I kept telling people this thing's going nowhere. Now, this candle right here, that is a setup for a sell signal. We now have another lower high. Now, I've also been talking about the price action inside of this range, okay, inside of this consolidation is pretty much meaningless. I've been saying that over and over. And I mean, this price action here is no exception, but it is a sell signal developing. The reason why this is notable is because the broader structure is still bearish. Nothing has changed on the economic front. Lower prices are still favored. So if a sell signal shows up inside this range, there may be a little more weight to it. You understand? Compared to taking buy signals inside this range. Either way, it's going to be highly random in this area. I am considering sharing a swing trade idea in the chat, based on this, but I'm going to mention that this is a highly random area and there's no way to know if we're going to get follow through or not. If this is followed by a bullish reversal, you have to get out because this thing can squeeze. All right. You're not in the ideal location for a short setup, but what you have on your side is the structure. Does that make sense? So if this thing breaks lower and we test 18K again over the next few days, this thing can start moving because again, a lot of people are long, right? Because people don't know any better and they like to believe all these morons out there that keep telling them to get long. And when they all get forced out, you see a break. That break can take us to 17K. I'm still targeting that area in general, even though we have not touched it yet, or, it's been quite some time since we've been anywhere near there, okay, going all the way back to June. That's still a reasonable area, okay? The bullish side, there's really not much to say about it. There's no long signal. You're not near a support, so there's really nothing to do on the long side as far as swing trades or day trades. Okay, let me take a look here. What are you guys saying in the chat? You guys talking about me behind my back, in front of my face? Let me see. Okay, stream. Okay, cool. Okay, cool. From Ghana. All right, cool. All right. Oh yeah, if you want to mention what country you're from or what city you're from, that's always a cool thing. I'm not taking questions like I normally do in my other stream, because this is really more of just, we're analyzing the price action and giving you perspective so that you have some reasonable idea of how to manage your own decision making throughout the day or the next few days. All right, so that's Bitcoin on this time frame. Let's take a look at it on a 60-minute chart. Okay, now again, I go into the smaller time frames for these streams, again, for people that are interested in day trades, because you want to get an idea of levels and expectations. Now, let's talk about how things have been changing. So in recent days, right, I've been talking about, let's first put our levels, right? We were talking about supports here. Yesterday, we were breaking, okay? If you go back to yesterday's stream, we were breaking. Look what happened since that break. Lower high, lower high, lower high. It found new support in this area, which should not be surprising, okay? So right there, you have two levels to consider. Look at the current price action right now, the current 60-minute candle. It's basically giving you some sort of buy signal here off of an area where a buy signal is likely to develop. Now, as an intraday trader, the key to something like this is, for one, you have to recognize that you have all these minor resistances above you, okay? You have lower high over here. You have a lower high in this area right here, okay, which actually coincides with this back in here. So you have all these resistance levels above you. So you don't sit there and say, okay, I'm going to go long and I'm going to hold it till it goes up here. It may not get there, okay? You have to stay with what's within reason based on the structure that's available at the moment. The structure has lower highs all over the place. Lower lows are favored. As we just saw with the daily chart, lower lows are still favored. So if you take a long at a support, you have to understand that the probability of follow through and the probability that that support holds is low. In other words, it's a highly aggressive trade, okay? So your expectations need to be adjusted. The more conservative thing to do intraday is wait for a test of resistance and look for the short, okay? If the market can work its way up to that level and it gives you a sell signal, that's a reasonable level. If the market squeezes a little further, which, again, you have to be open to anything, then that's your next area to be looking for the signal. Keep in mind, if you're looking for day trades on Bitcoin, you're not looking for thousands of points. You're looking for 150 points, something like that. If you think you're going to make more than that, you ask for trouble, a lot of trouble. The goal here is to keep your risk small and take small bites relative to the time frame. Of course, if you're going to day trade this, it's best not to do it on a 60-minute chart. You use the 60-minute chart to get your perspective, okay? Does that make sense? So these are your levels, and those are some ideas. Now, look, I mean, as I'm speaking, this thing is going right back into the support. Look at that, okay? Again, why it's so important to wait for setups and confirmation, right? While this candle was trying to be a bullish candle, we had no confirmation. The candle hasn't closed yet, okay, or nothing. That's why you have to wait for the closes. This thing has more than 15 minutes before it closes, so you have to wait it out. Don't react just because a candle turns green. It can close red. Wait for the close. All right, and that goes for every time frame. Okay, hey, Joel. Yeah, it's my new day job, doing analysis each day. Okay, cool. Cool. So anyway, actually, I've been doing this stream since August. Okay, I've just been doing it privately. Bill knows because he's come to every single one, even when he has no internet. I think he missed one stream, but he comes to every single one. I've just recently brought this out to YouTube. Anyway, so that's the situation. Keep your eye on Bitcoin. It's in a long area, but there's no long signal. You have to wait for the signal. Let's move on here. Okay, so let's go back to the daily chart, and let's now take a look at the bond market. Okay, now I'm not going to spend a lot of time on the bond market because it doesn't change a whole lot, but let's see what's going on here. So yesterday we were talking about the potential double bottom and all that other stuff in the bond market. You guys should be checking this chart every single day. Check the 10-year note futures, okay? Because you need to see what's going on here. There's nothing changing here besides that we're testing the low again, which means rates are still rising, Kramer. So that's the thing. If rates are going to continue to rise, that's what this is telling us, which is also a reflection of a stronger dollar, which we will take a look at, then you can't expect anything bullish to be sustainable. So don't get sucked into those bullish arguments. Oh, the bottom of the market, the Santa rally, blah, 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 blah. Not with the bonds looking like this. Okay. So again, it's not a one-to-one relationship, but you have to understand more rising rates, bad for everything. It puts more pressure on things, but it's not one-to-one. People think, oh, bonds lower, stock market should be lower. Not one-to-one. All right. You have to understand that. So anyway, no double bottom, right? The double bottom is not in effect. No long on bonds. Okay. So if bonds are going to continue lower, expect more bearishness. Okay. So that's the bond market. Now let's take a look here at, let's go to the S&P, because again, this is going to affect stocks, right, in an adverse way. So the S&P is starting to feel a little pain here, right? Okay. By the way, if you guys have any questions, I don't think Bill exists. Bill exists. Oh yeah. Okay. Anyway, yeah, he's not a figment of my imagination. So at least if he is, he writes back to me. Anyway, here's the thing. So S&P, right? Again, fooling people into longs, right? We had that CPI day, right? That was this reversal over here. Everyone getting excited. But as I kept talking about, if it can't take out a resistance level, it's meaningless. Now, if you're a day trader, there's opportunities in a move like this. This is a pretty significant move for day trades. But as a swing trader, it's very risky. Unless, if you took the chance on the reversal and now you're starting to get this hesitation, this is where you need to be concerned and prepared, okay? Prepared for what? For the conflicting signal. And that's this right here. It's developing. Now, again, the day just started. So this thing can close as a bullish pin bar. If it closes as a bullish pin bar, I mean, while that may mean that, we're likely to work higher, prices are likely to work higher, it's still near a resistance area. So I wouldn't be going crazy. I would just, if you're long, you try to give things a chance at that point. But don't go crazy putting on new longs or putting on more risk, because it's not a good location for that, okay? Things can go against you very quickly. Now, if this candle closes like this, and this is why I do these streams, so that you have some sort of expectation or something to look for by the close of the day, okay? So if the candle closes like this, you have an inside bar. If tomorrow this low is taken out, a new sell signal or conflicting signal against that long will now be in play. That's going to put bearish pressure on all of your mainstream stocks, all your Apples and all your other nonsense mainstream stocks that everyone, can't look beyond of. They're going to feel the pressure because this is a reflection of them. So if you get the sell signal, watch out for the low. All right. That can possibly be tested over the next few days. Can it go lower? It's possible. So keep that in mind. The structure, lower high, possible lower high, is pointing to lower lows. I don't have an opinion. The market tells me what I should think. And that's what the market says. I go by price action. I go by structure. I go by context. Okay. I don't go by, the oscillator says this, because they're complete nonsense. If you were selling oscillator signals on this low, you got squeezed. And that's a very painful thing to sit through. What if, squeezes can be very irrational. What if this thing went another couple of 100 points higher? That would be unbelievable and can really wipe out your account, especially if you're using leverage. Okay, so anyway, point is, this can turn into a sell signal. If you're long stocks, be prepared to maybe either tighten your stop, maybe exit, take small losses. Don't get caught in the lower low. Don't sit there and be in hope mode. Oh, it'll come back. Oh, the stock market's at the bottom. Oh, how much lower can it go? Then the S&P can go to 3,000. Okay, and that would be a very painful move for many stocks. All right, enough of the S&P. Let's take a look at the NASDAQ real quick. Guys, let me know if you have a question too. I can answer a question or two in here. Although I'm trying to keep these streams at like 20 minutes, 20 to 30 minutes. I tend to go to 30 minutes. I talk too much. Anyway, look, same story with the NASDAQ, same exact story. So if, again, you get the sell signal here, I don't have to re-explain all that stuff. If you get the sell signal right here, that's going to be a bearish signal for tech stocks. So if your tech stock is sitting on a support, or your tech stock happens to be at a resistance and this thing breaks, you're probably going to see your stock break as well. Okay. Now, again, I'm not talking from the investing perspective. I'm talking from a very short-term swing trade perspective. This is basically reasonable for the next few days, maybe next week, right? That's the outlook. That's the time horizon on this. Investing, people ask me a lot, well, what should I start investing in and this and that? Because we are nearer market lows, if anything. And at this point, you have to keep focused on those interest rates, right? So if you're going to invest or you're looking to put money to work in the market, pick conservative investments. Pick stocks that pay you to hold them, that are not likely to get as beat up in this as something like a highly speculative penny stock, which you should not be going anywhere near in this environment. Okay, does that make sense? But you can also, there's nothing wrong with staying out. Also, if you're going to invest, take very small bites, because this is not the turning point yet. Okay. Anyway, and I say that with confidence because of the bond market. All right, let's move along. So that's the NASDAQ. Now, let me show you the NASDAQ on let's take a look at the 30-minute chart. Okay, no, not 30-second, 30-minute. So again, this is for you intraday guys. All right, intraday people. If you're looking for day trades, whether you trade the NSX or you're trading, if you're involved in any kind of tech stock, this, by the way, will not have the same effect on common day trader stocks like pharmaceuticals, biotechs, things that need like certain approvals and that kind of stuff. They're driven by their own news. So this won't have the same effect on those. If you're a pro day trader, or you're someone with a lot of experience, that. I shouldn't have to explain that, but just understand that this applies to all your mainstream heavy tech stocks, that kind of stuff. Okay. Anyway, so what's going on here? Intraday, here's your support right there. What is that? 11,000 about, right? Okay. It's trying to bounce off that level. Now, 11,000 is a nice whole number. It's bounced there before recently. Okay. So there's some buying activity there. So if you're looking for a long, that's the place intraday to be looking. Now, look at this candle. We have less than 10 minutes before this thing closes. All right. I mentioned yesterday, there's something called the opening range breakout. And it has to do with the market open. It's an old strategy. It's nothing new. And it can give you some interesting perspective and levels if you're working intraday. Now, the opening range is basically the first 30-minute candle. All right. Here it is. So this is going to close probably something like this. We have less than 10 minutes or whatever. And it's a pretty strong candle. Now, how does the day play out? Do we take out the low of the range, or do we take out the high of the range? That's going to give you some bias for the continuation of the day. All right. And that can affect your tech stocks. So don't make any judgments now. It's still a little early. What you want to see, for one, is, do we get a test of support? Do you get another buy signal there? Look at the previous 30-minute candle. That's a nice little inside bar, right? Bullish pin bar situation. And this is certainly a nice day trade situation if you manage to take such an aggressive trade off of a support level. Keep in mind, you're looking for a small bite, because again, you're fighting some structure that's not exactly favorable. So here are your levels, right? You have the 11K. You have this resistance right here. What is that? 11, basically 11.2. We'll say the 11.2 area. All right. You want to round that to whole numbers. Then you have this area up in here, right? Clearly, there was some selling here. Let me just draw a little rectangle there. Clearly, there's something going on there. Okay. Look at that dramatic sell-off. So these are your levels intraday. If you're looking for shorts, wait for resistance. Don't short the bottom. If you're looking to short a break of the bottom, it's possible that you get the follow through, especially if too many longs pile in over here, right? And they all have to pile out on that break. But that's a very aggressive trade. And keep in mind, you can get stuck, right? Just like all these people here. Look at these tails. Someone was selling into that. And if they're short, they had to sit through this. Not a good thing to sit through. All right, so be aware of that. If you take such a short, for one, you're not going to use a 30-minute chart. You're going to use a smaller time frame. If you take the short and it turns on you, it turns against you right away, you need to be out, because this thing can go easily. This thing can rally 100 points in 5 minutes. I mean, I've seen the NASDAQ can do stuff like that. Okay, and you don't want to be on the wrong side of that. Anyway, that's the NASDAQ on the day trade time frame. Let me know if you guys like this stuff, by the way. If you want to click the like button or something here on YouTube. Also, if you want to just give me any kind of feedback, it's always helpful. I want to make sure that this information is useful for you. I don't want to sit here and waste your time and mine too. If you're like, oh, I don't look at the NASDAQ, oh, I don't care about day trades, just let me know. Anyway, so that's the NASDAQ. Now let's move along to the dollar index. Okay, so dollar index. Look at this. Now, people that were here in my stream yesterday, what was I saying about the dollar index? What was I saying? I was saying that we had this little range situation. We were near the bottom part of the range. We can rally off that range, basically. So that's what the market's telling us here. The market gave us the answer. It's rallying off the range. This is a higher low. Okay, everyone focused on the lower high and so, oh, dollar's weak now. Dollar is not weak. Dollar has a higher low over here, and it has a whole history of higher lows. Higher high is likely to follow. Don't get confused by a lower high. If anything, this price action can just be a tight consolidation, right? Poised to go higher. And that's what the bond market supports. So it's not just the dollar moving on its own, right? You have a bond market behind this thing. So with that being said, you have some sell signals, all right? We'll take a look at gold and the euro here in a minute. Oh yeah, I have to take a look at QNT because I put it in the title. All right, let me see here. Thoughts on euro. Kai, I'm going to get to the euro. Alex, can you take a quick sure, I'll take a look. All right, now I can't spend too much time looking at symbols, but here, let's take a look at let's take a quick look at here before we get off the dollar here. I just want to mention QNT because I put it in the title. People are like, oh, I came because you put QNT in the title and you never went over it, so you tricked me. I put it in there because it was an interesting move. Look at this, right? We talked about this yesterday. Someone brought up QNT in my stream the other day, so I've been watching it, and we talked about the sell signal, right? So the sell signal confirmed, and now look at this. So it's trying to hesitate a bit here. It's interesting because Bitcoin is poised to pull back, and this thing is fighting it. Okay, so there's some possible strength there. What do you do with this? I mean, this can turn into a swing trade, but the thing is, this candle, what I want to point out here is this candle is too early to make that judgment, okay? First of all, it needs to close. Second of all, I would like to see, I mean, if the market would be more in agreement with my opinions, which of course it doesn't care about, it would be nice if it can test this level here because that's an old resistance, okay? So if it can work its way into there and then give a buy signal, that would be more compelling, but it may not do that. So if instead this candle closes and takes out the high tomorrow, that would also be a buy signal. Keep in mind, if Bitcoin starts to break, it is likely to put pressure on this, even if a buy signal develops. I mean, these things can do their own things, but if there's a dramatic break in the major coin, don't be too surprised if the buy signal fails. All right, just keep that in mind if you take such a trade. I'm not a big fan of simple buy signals, meaning one candle and then it goes, but this is a nice, strong trend. So you may get a one candle and then it goes, but it would really be helpful if Bitcoin was behind you as well, okay? Not fighting you. All right, so anyway, that's QNT, interesting chart. Now let's move along here. So I went over the bonds. I went over the dollar. Let's take a look at euro because Kai. Actually, you know what, Kai? Hold on. Before I go into euro, let's just mention gold real quick because gold tricks a lot of people, especially people who have opinions. Okay, so here's the thing. I told you gold was setting up for bearish. Look, that's the sell signal on gold. You shouldn't be long gold. If anyone is long gold, now if it's long term, like, oh, I'm in it for 10 years, okay, that's another story. But if you're long gold because you think it's going somewhere soon, the market's going to take your money. Okay, so gold is going back to test this low. No surprise, dollar is going back to test its high. That's what it appears to be doing. If the dollar pushes higher, gold is likely to push that low. So no reason to be long here. If you're thinking very long term, I mean, this could turn into a double bottom, but you're still fighting the environment. So chances favor a lower low. If you're looking to accumulate gold in the long term, buy a gold stock and buy small shares, small, a couple of shares here, a couple of shares there, because better prices are likely if gold continues like this. And as long as the environment stays the way it is, it's going to be hard for gold to rally. Now, gold seasonally, this is generally a bullish time for gold. We're going into one like November, December is typically a bullish time for gold. So that may help gold a bit, but you can't fight a strong dollar. All right. So if the dollar is still pushing highs, even if we go into a seasonally stronger time, I don't think that will translate into much for gold. So just keep that in mind. I just want to give you some perspective. This would have been a nice aggressive swing trade to call, but right now I just have so much stuff on my plate. I'm trying to prepare the Discord chat. There's a link to it in the descriptive portion. You guys should be in my community. It's free right now, and you can see what's going on in the active investor channel. You should be able to anyway, right? That's where all the action is. And I plan to put more trades in there. The thing is, I need to get some things in place before I do that. This would have been a nice trade, aggressive trade to put in that. Anyway, of course, we see that after the fact. All right, let's go to the euro because Kai wants to see it. All right, Kai is a longtime student, by the way. So look, this is, by the way, this I was looking at this earlier. This is a sell signal. Okay, look at this little candle here. That's not an inside bar, but it almost serves the same purpose. Okay, we took out the low significantly. What was the low? 98.12. My original short from a few weeks ago was 98.15. So this basically could have been re-entered as a new short. Now, where's this thing right now? 97.72. Here's what I'm going to do with something like this. That sell signal is in play. So do I chase it? Do I short this thing right now? Not a good idea. All right, your risk is going to be defined by this area up here, probably a reasonable area. I mean, what is this, 98.50, 98.75. So 98.75, 98.80, something like that. So where should you put your stop? I mean, that's a 100 pip stop from the current price. So here's what you do in a situation like this. And this is probably what I'll do. And I'll probably put this maybe in the Trade of the Week channel. Use a limit order. Don't chase this, because a lot of times, as you can see, if you look at previous price action, look at all these tails all over the place, right? You see that? So there's a lot of noise. You can capitalize on that noise. Put a limit order at 98.15, maybe 98.05, and perhaps this thing finds a 30 pip mini rally at some point, taps you in, and now you have a better price, okay? Instead of shorting this bottom, if this thing turns around and squeezes, now you have the worst price. You understand? So you may not get filled on that limit order, but if you do, you're getting a good price. And there's a chance, there's a decent chance you get filled because these things are noisy. That's how you have to play that game, okay? Take yourself out of the equation. So I'll probably put that trade with the limit order in the chat rather than a stop order, which is typically how I will, that's the typical order that I use to get into these swing trades. All right. So limit order is basically the solution to chasing. All right. So that's the euro. By the way, the target on this thing, I was originally looking for 96.15, right? We never got there. Maybe with this lower high, if the dollar goes for that higher high, 96.15 is still a valid target. Maybe the high 95s. That's the area I'll be looking for. Okay. All right. So let me just see what we have here. Okay, cool. Go also maybe. Okay, so pound. All right, sure. I have a minute for that. Let me just go. Let me take a look. All right. Okay, cool. Is it right to invest in ETF at the moment? Okay, good question. And let's see. I just want to see what I can catch up on here. Hold on. Let me just catch up on this chat. I follow a lot of people. You seem to have a unique, much more simple than others. Oh, I appreciate that. Well, I'm glad to hear that you follow other people and you can see how I'm not the same. The reason why I'm not the same is because I've been in this game for 23 years. Most of the clowns or fools that you follow, they brag about being in this game 5 years. Okay, oh, look at my RSI. Oh, look at this. Oh, look at that. It's nonsense. Either they're fooling themselves or they don't realize that this game is highly random and all that stuff. None of that stuff gives you any advantage. I keep saying that over and over and over again, but people still, oh, the RSI. Nonsense. It gives, you can flip a coin and get the same result. None of these clowns know that. Or if they do, they don't want you to know that. They all imply that this game is just, it's your right to take money out of the market. When we're in the markets, we're here to make money and we want to make the most money possible. And it's possible if you just do this special thing. It's a random game. This is a big casino. Okay. And that's what you have to realize. And you have to respect that risk. That's why I'm not the same as the others. It's because I've been in this game a lot longer and I've made a lot more mistakes. And I don't claim to have figured out the markets. Okay. But I have figured out how to respect and listen to the market and let the market tell me what it thinks. That's where I get my ideas from, right? The market speaks to me, I listen, and that's it. I don't question it, I don't fight it, I accept it. And I respect risk. That's it, I focus on risk. I don't care about reward. If I can manage my risk well, the reward comes. Everyone else is focused on the reward. Oh, look, I made $10,000 today on this one trade. I am amazing, and you can be too if you buy my training program. All right, anyway. All right, enough of my rant. You got me started on those anti fake guru rants. Okay. Let me see here. I'm just going back on the chat. There was an ETF question. Why would I invest in ETF instead of following what they do and buy myself? Well, the ETF, all right, so there's some good questions here about the ETFs. Let me see if I can answer that real quick. Then I got to wrap this up. Look, if I miss your question, I can't answer all these questions. What do I have here? The euro. Okay, look, let me do this. Let me do the pound real quick, and then I want to answer those ETF questions. I mean, look, the pound is, the reason why I like the pound is because obviously it's, it's a dollar, it's counter dollar. And look, the sell signal here is not as dramatic as the euro, all right? The pound may be slightly stronger, relatively speaking, compared to the euro, but look at the sell signal. You have this inside bar right here, okay? It took out the low just recently. What is this? 1255 is the low. We're at 1240. It's only 15 pips off that. So that's not bad, okay? Something like that, you can place that market order now. I mean, 15 pips is not a big deal. Your stop will have to go up here somewhere. Typically on the pound, you're looking at about 100 pips normally. What is the high here? 1439? Yeah, about 100 pips. That's standard for the pound, okay? If the dollar rallies, pound moves. So you'd be targeting this area right here or possibly lower if you want to be a little more aggressive on the short side. Okay. I like this. I like this idea. So maybe I'll choose this one instead of the euro. Okay. Anyway, so that's the pound real quick. All right. From a swing trade time frame. Okay. Let me answer that ETF question. So here's the thing. Why would you invest in an ETF when you can go for the individual stocks? Well, the ETF in theory helps you be more, your risk is more spread out, right? Because the ETF like NASDAQ 100, for example, QQQ, it's 100 stocks compared to just buying Apple. Although, I mean, both charts look almost identical, right? It's basically the same idea, except, if Apple has like some bad news, Apple will get hammered, okay? And the ETF won't get as hammered, right? That's the idea, because you have 99 other stocks that may not be doing as bad. You understand? That's the idea behind that. So ETFs are good. I think they're good investment choices for long term. But again, you're playing the market at that point, right? And you're especially playing interest rates. If you're buying the Qs, if you're buying this, the SPY, whichever ETF you're buying typically. I mean, there's so many of them. I'm just talking about the main ones. But you really have to understand what's in that ETF and what it's most sensitive to. I mean, you can buy like the banking ETF. You can buy, consumer whatever ETF, right? There's so many of them. Energy. You can buy the energy ETF. So you have to understand what they're most sensitive to. If you're going to play an ETF game, again, treat it like a stock and you take small shares. Especially if you're going against the economic environment, because that's really going to have an effect. In fact, that's one of the things that I talk about in my webinar. I talk about it's called the Pring Turner. It's basically the Pring-Turner business cycle. And what that is basically a seasonal roadmap of how one market affects another market, like bonds, stocks, and like things like futures, right? How they're related to each other in terms of seasonality. And that's a very important gauge because it all begins with the bond market, okay? And that's why I spend so much time with the bonds, because right now that's a major factor, okay? Because interest rates, inflation, all that other stuff. So there's a lot of key information that can come from the bond market. And the bond market is where the party starts, okay, or not. Because if money's expensive to borrow, then it's bad for everyone, right? Money companies that have to borrow it are going to borrow less of it and blah, blah, blah. Their profit margins are going to shrink, all that other nonsense. When money is cheap and everyone has a ton of it because they can borrow tons of it, that's when you see a speculative market. That's when you see the nonsense that we saw like a year ago with NFTs, because everyone had so much money to floating around that they'll spend $3,000 on a worthless graphic. Oh, man, he's NFTs, but they're worth something. No, they're not. They're worthless graphics for the most part. Okay. Yeah, there's some of them that can have some value, but that's just an expression of too much money floating around. That's basically what I thought of that. Now, as you can see, they're very unpopular. I see a lot of talk about them still, but those are just people trying to unload their NFTs. I don't know. Maybe it's when we have a speculative bubble again, you'll see money flow back in there because people have money to throw around, right? I mean, that's how you have to look at it. Anyway, all right, enough of that rant. I'll talk about that for hours and hours and hours. ETFs give you theme exposure. Yeah, right, exactly, Kai. I mean, basically, it helps you ETFs help you spread out risk. You know, they're better for long-term stuff if you don't want to do anything else, for more of a passive investing type of idea. But you know, if you want to see dramatic returns in things, for one, we're not in that type of environment. For two, you have to find high potential, low float stocks. Okay, I mean, or altcoins. And then, like I just said, we're not in that type of environment. So, you know, if you find something that has that potential, it may be getting beat up right now, and you have to stay small because there's no reason for money to be floating into highly speculative assets, right? And that it also includes Bitcoin, which is a highly speculative asset. It's not a traditional or conservative asset compared to other more conservative and traditional assets where money is going to go first, okay? There's a lot of smart money out there and it knows where to go. You have to learn how to track that. Anyway, all right, you guys. So if I missed your question, I apologize. Okay. Yeah. What are your thoughts on Bitcoin competing with CBDC when that comes out? CBDC, can you explain? I'm not familiar what that is. Maybe you can explain that, you know, because I don't pay attention to a lot of stuff. I only look at prices. So what is CBDC? And then I'm going to wrap this up because I'm over my time here. Let me put Bitcoin back up here. So we have a couple of trade ideas here, developing people. All right, pound, euro, Bitcoin, you know, a few things going on here. Whether they follow through is another story. All right, so let me see. All right, by the way, people, again, if you're new to my stream, you know, make sure you check the links in the description. There's a few interesting things there. I have my webinar at 3:30. I hope to see some of you there. Central banks. Oh, well, look, Bitcoin is obviously something that's not popular with banks because it takes Bitcoin takes central banking power away, right? So obviously they want to still stay in control. That's normal. So okay, so they're coming up with their own currency. I mean, how is it going to affect Bitcoin? I have no idea, really. I mean, I would think that it may take some oomph away from it if people are going to put their money into that, but I don't know. You know, a lot of people that are really into Bitcoin are anti-central banking type of people. So, you know, how are the central banks going to position that thing to basically make it more attractive to Bitcoin? I don't know. Okay. So there's only 21 million. Right. That's the thing, right? With something like Bitcoin is a limited supply. Central banking, obviously, they're going to be able to, we have the same problem that we've always had with central banks is they inflate they keep printing money, and they'll just print their fake money too. They'll print their currency, whatever, their Bitcoin version. They'll just print more of that too, right? That's the problem with them. And that's why Bitcoin was invented in the first place. So I don't know. I mean, my instinct basically says that something like that probably won't be very popular with people. But again, central banks have a lot of power, so they may just force it on people. I don't know. All right, we have to see how that plays out. I don't have any opinions. I let the price tell me what to think. Okay, and right now, price is not exactly bullish on Bitcoin. All right, so anyway, people, I'm going to wrap this up here. If you're in my chat, okay, the link for this video appears in the analysis channel. That's where it automatically appears. So that's where you should go look for the record of it, because I'm not going to put the link in the blah, blah, blah. I'm not going to do that. It's in the channel. It appears there automatically. So if you want to watch the replay, you can go there, okay? And that goes for all of these. All right, people, so I'm going to wrap this up. Again, if I missed your question, I apologize. I know there was a couple of questions in here with Luna and stuff. I'm sorry. I'll be back here tomorrow. I'll be on here every day at the U.S. market open. Come back, check it out, ask me a question, all right? So, hey, everyone, thank you for watching. Enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you again. Thank you for watching.